Good morning to all, dear students of BCom Part First. Today, I am going to introduce you the lecture on cost accounting and introduction. Students, cost accounting plays a very important role in every manufacturing unit. Cost accounting is a fast-growing and comprehensive term. It is a specialized branch of accounting. The present age is the age of competition, globalization. Hence, cost accounting is used to describe the principles, techniques, processes, systems, subsystems to be employed in business. Today, it is not only enough to prepare the profit and loss count and the balance sheets, but it is equally important to ascertain the costs at each processes. So, cost accounting is the process of accounting for cost. This process begins with recording of income and expenditure and ends with preparation of statistical data. Students, it is a mechanism. Cost of production are ascertained and concluded. It is an art of determining the cost. Cost accounting generally includes number one, very important to understand for the students of commerce, that is cost control. Second, cost consciousness. Third, determination of products and unit cost and profit and loss for various products. Cost accounting also deals with inventory variations. Very important to understand. I will repeat it again. Cost accounting deals with inventory variations. Now, if we go through the brief history of the cost accounting and realizing the importance of it, there are even made some amendments from time to time. As far as Companies Act of 1956 is concerned, for defining what cost accounting is all about with the following important amendments. In 1965, the government of India was authorized to make the accounting compulsory for the company engaged in the industry, notified in that order. This act also further empowered the government of India to issue orders to get the cost accounting of each company audited. The second phase of it came as per the act. Each company should prepare the accounts as per cost accounting records, rules that are being given by the various institutions or the industries. Now, dear students of commerce, here we have to go through the section 209 subsection 1D. The recording of cost accounts has been made legally compulsory. I will repeat this for your learning, that as per section 209 1D, the recording of cost accounting has been made legally compulsory. From 1st January 2004, MAOCARO has been changed by CARO, means Company Audit Report Order. Auditor has to submit his audit report as per rules given in the CARO. Again, what CARO is, dear students? It is Company Audit Report Order. Under this authority and the changes made in Campaign Act in 1956, the Government of India has made compulsory and maintenance of cost accounting in many industries a compulsory tool for validation. Dear students, now I would like to explain here some terminologies relating to cost, relating to costing, and relating to cost accounting, so that we can understand well what cost is, how it is different from costing, and what is the basic logic behind cost accounting. I will repeat: cost, costing, and cost accounting. Now, going for the first term, that is cost. Cost means the amount of expenditure, actual or notional, incurred on or attributable to a given thing. I will explain it, repeat it once again. What is the definition of the cost? Cost means the amount of expenditure, actual or notional, incurred on or attributed to a given thing. Now, thus, when any commodity is manufactured or some services are rendered, the expenses incurred on the production or in providing services are including in the cost of that commodity or services rendered. Is it clear? That means, again, all costs are being put together for every processes that has been put forward in the manufacturing of the goods. That is the term cost, composite cost. It can be the actual or it can be the notional. Coming to second point, what is costing? Costing is a technique and process of determining cost. I will repeat it again. Costing is a technique and process of ascertaining cost. Now, every businessman wants to know the cost of items produced by his concern. The process or technique adopted for the purpose is known as costing. Big industries use written procedure for finding the cost, whereas the small and micro level businesses use only the cost calculations. Thus, cost can be calculated by process, written or oral procedures. Even in the micro businesses, costing is possible by the process of mental arithmetic, because processes are very small. There is a main difference between cost, costing, and that means costing is the process of finding cost, whereas cost is outcome or result of the process. Repeat, because this is very important to understand for the students of commerce, what is the basic difference between cost and costing. So, for your convenience, it is important to understand it that costing is the process of finding cost, whereas cost is the outcome result of the processes. Now coming to the very important terminology, and that is cost accounting. Cost accounting is a written procedure set on legal foundation for estimation of the cost, known as cost accounting. Costing may be written or in the oral form, but cost accounting means the written and scientific and systematic procedure. As far as we go for the definition of the cost accounting is the process of accounting for costs from the point at which the expenditures is incurred or committed to the establishment of ultimate relationship with cost centers and cost units. So there is the relationship between the cost centers and cost units as far as cost accounting is concerned. Now, again, we have to understand what are the techniques of costing. Very important for the cost accounting students and the students who want to pursue knowledge in cost accounting. Students, method of finding the cost of an item depends on the nature of that item. I will repeat it again because this is a very important line. Method of finding the cost of an item depends on the nature of that item. On the basis of the nature of item, a suitable method is adopted. But cost of the item can be of the different types, such as number 1, standard cost, marginal cost, total cost, and so on, many more. All these types of the cost can be found in respect of the same item. These different costs are known as types of costing or techniques of costing. Now let us discuss about historical costing. What we understand as historical costing. What we understand by standard costing. So let me start with the historical costing. Historical costing is concerned with the time of costing. I will repeat it again. Historical costing is concerned with the time of costing. When the process of production of the item is complete, the actual expenses incurred on it can be known as historical costing. Thus, historical costing is a technique of ascertaining the costs. For example, 100 fans were manufactured in a factory. If the cost of the product is calculated after completion of the manufacturing process, it is known as historical costing. The cost of determined will be historical cost. Thus, historical cost is the actual cost of the item. Students of commerce, we have to remember that historical cost is the actual cost of the item. Now going to the second point, that is the standard costing. Standard costing is also concerned with the time of costing. Under this technique, the cost of item is fixed as a standard before the item is actually manufactured. Standard cost is the cost of the item estimated prior to its production, means before its production. When the items are actually being manufactured, the actual cost is found in historical cost. Actual cost of the item may be less or more than the standard cost. Very important. Actual cost may be less, actual cost may be more than the historical cost. Historical cost, reasons behind there are the actual cost and standard cost is also then applied when the efforts are being made to control it. Thus, standard costing means the preparation and the use of standard costs, their comparison with actual cost, and the analysis of the variance to their causes and the processes within the costing procedure.